Well, good morning, everyone. Welcome to today's Coffee with Cramer, where we talk about real estate, lifestyle, and community. Today, we've got great special guests, and that was prompted by some questions I'm continuing to ask in this crazy real estate market. The big question is, Don, we're wanting to buy a house, but we're thinking about waiting. Should we jump in now or should we wait? Well, I'm excited to have Michelle Morgan with Security National Mortgage to talk about the cost of waiting. Welcome, Michelle.
Thank you so much for having me.
Cheers to you.
Cheers. Here we go.
Excellent.
Thanks for having me back on the show. I love coming on and talking about all things real estate, mortgage related in current economic times, and be a resource for your viewers.
Absolutely. And I love having Michelle on, and I love catching up with her and talking because from a lending standpoint, she's looking at from the monetary standpoint. I'm looking at from the real estate standpoint, and we'll geek out on numbers.
Absolutely. Love numbers.
Love numbers because the thing about numbers is that we know what we're dealing with, and we're also concerned about things about investments, building wealth, building equity, and knowing, okay, is that house too much? We all may feel it. We may see the news, but the key is understanding what's going on, what's going to be possibly trend lining to give the people the information they need to make the right decision.
Absolutely. I believe that, information is key when you're trying to make a huge financial investment. And this is one of the shows that you can get information.
Absolutely. And so, Michelle, we continue to talk about the housing market. It is going bananas. We have about just over 2,000 houses for sale. We have about 3,400 homes under contract.
Okay.
Basically less than a month's supply here in Las Vegas. It's been that way for a while. It's probably going to be looking that way for a bit. Back at the beginning of the year, now they've revised this number upward. The home price forecast amongst 7 of the leading experts or economists, including National Association of Realtors, Fannie and Freddie, CoreLogic, Zelman, Mortgage Bankers, that group, we're forecasting a 6.1% increase this year in house appreciation. Well, we're already 5.8% up in Las Vegas. We're at a $450,000 median price. So appreciation, even with these interest rates going up, are continuing to climb.
Absolutely.
Yeah. And, for a future show, we'll definitely dive in and kind of talk about, why that's happening. Is there a possibility of a crash, things of that nature? But again, today's thing is about cost of waiting. Whether you're looking to act now or thinking, I will wait 3 years from now. And, the economists and people are looking at, based on supply, demand, of those factors, probably at least a good 2 or 3 years of growth in the housing market.
Right.
In terms of appreciation and new homeowners and things of that nature. So it gets back to that question about waiting. Should I wait?
Well, there is a cost of waiting if you decide to wait. And I think it's really important for your viewers to know the cost of waiting. I've put together a couple of examples for your viewers to view the actual cost of waiting and as opposed to buying now in today's market. With
Absolutely.
All things being equal, if you can afford and keeping your monthly debt to income ratios down and can qualify now, I would highly recommend that you do so. And
Yeah. So Michelle put together a couple of great slides. We've talked about this before. She came on the show, and it was just really hard hitting on amount you're looking at paying by waiting it out. Also to where you could be impacted overall in the long-term effect of the loan, the appreciation rates, and things of that nature. So we're factoring in a couple different things, and I think it's important to show people if they buy now versus waiting. And again, as you said, Michelle, if you can afford it, that means not, figuring out every little cent you have, but you have reasonable debt to income ratio,
Absolutely.
you have a need for home ownership because let's say you have a growing family, you're moving out of rents because rents are going sky high.
Rents are, exactly.
Uh, get in now because waiting can be costly. So we're going to throw this first slide up here, and this is a $400,000 FHA loan.
Right.
So why don't you take us through this real quick?
Okay, so for this scenario, the cost of waiting for a $400,000 home in Clark County, Nevada, we're looking at an FHA loan, 3.5% down, which is the minimum down payment for this loan on a 30-year fixed. So your loan amount, your base loan amount for an FHA loan for this would be $386,000 based on an interest rate of about 4% for this scenario. When all things said, we're looking at a principal and interest payment of $1,843, and the cash to close is about $28,994. Basically, some of that is financeable, some not. If you wait 6 months, same home, that will go up about $14,000. Interest rates go up to 4.25%. And your monthly principal and interest goes up to $1,970. And although it doesn't seem like a lot, but every little bit, with the cost of housing, so is the cost of goods and services, other things. So you want to, for a first-time home buyer, it's really important to really consider that. They waited a year for the same home. That same home may cost them about $421,944. Same home. Interest rates may go up to 4.375, and you're looking at a $2,000 mortgage payment. And for most first-time home buyers, over $2,000 mortgage payment is quite a bit. And the cash to close about $29,974. Fast forward to year 3. Same home, approximately $454,821 for the property, and monthly interest, principal and interest would cost about you $2,300 or almost $2,400, $2,390 per month. And this does not include your property taxes, your homeowner insurance, HOA, mortgage insurance on an FHA loan, and none of that is calculated. That's just your principal and interest. And the cash to close would be close to, $31,000. So it makes a huge difference in that scenario as far as just getting into a home at this point.
Exactly, and that's taking into consideration where they see interest rates going up from like 4 to a little over 5% over the next couple of years, but more regular appreciation in home prices, not the 20% surge, not the most recent almost 6% increase from the beginning of the year. We're talking an average about 3 to 4% year over year.
Right.
So just that alone can be a significant impact.
It's a significant impact because most buyers, their wages aren't keeping up with the appreciation of that. So usually what that would mean is what you could afford today, 3 years from now, would be a whole lot smaller to qualify, if you can still qualify if your wages don't keep up with the price of inflation and appreciation.
Yep. And we're just talking about kind of the tactical, which is the principal and interest, the check you're cutting to the mortgage company to pay off your loan. And now let's go to the strategic, which is, okay, let's chart that out over time. Look at the cost just from appreciation and amortization impacts.
Absolutely. So if on the same first scenario, the $400,000 home, the cost of waiting 6 months, that payment difference is $137, okay, which is an annual cash flow loss of $1,600. May not sound like a whole lot, but what you're losing is the property appreciation of $14,981. Amortization loss In other words, what amounts that you paid down your principal balance in 6 months. So if you add all those things together, you're looking at $18,346 loss just by waiting 6 months.
Mm-hmm.
If you go to waiting a year, you're looking at a payment difference about $200 a month, annual cash flow of $2,462, something you could do something else with, and a loss of appreciation and amortization. Now we're looking at $28,742. That's just waiting 6 more months, a year. You're looking at about $10,000 loss. And so that is where the cost comes. Not only in price and rates,
Yep.
but it also comes in, you're losing appreciation. You're losing the opportunity of amortization by paying down your mortgage. So those are also calculated in these scenarios.
Absolutely. And if you chart it out to year 3, that looks like a number of about 76,000.
76,000, same home.
Right.
So, and if you have not caught up, or your wages have not caught up, living expenses, your purchasing power could possibly be reduced.
Exactly. Yeah. As you look to move up to the next home, or you're looking to cash out later, maybe it's towards retirement, things of that nature. That's pretty big swing just by waiting a couple of years because of just the tweaks in interest rates and the tweaks of year-over-year appreciation.
Absolutely.
Now, the other one you put together here too is the people that are getting ready to maybe sell their beginning home and move up to the next one. So Michelle was kind enough to put together a cost analyst on a $750,000 house. And that's sort of the price of the home of people that are expanding their families, people that are sort of approaching the top or near the top of their income capabilities.
Right. And
let's take a look at that slide real quick.
Okay. So the cost of waiting, I used $750,000 price point, and on a jumbo 30-year fix for today. And basically, you need about 10% down, and that's a $75,000 down payment. But when you're with a mortgage payment at 5%, is $3,624. Now wait 6 months. That same $750,000 home now costs you $784,363. The rate has gone up by 0.25%. Now we're looking at a more principal and interest payment of $3,898. 1 year, same house, goes up to $799,395, just under $800,000. And in today's market, the rates continue to go up. We're looking at 5.375, and that's a $4,029 mortgage payment. So you're looking at bigger increases each month. If we fast forward to 3 years, you're looking at a sales price for the same house, $863,539. And honestly, I think these are some conservative numbers as well from what's really going on. And, and the interest rate goes up. And for this scenario, I had, I threw in a 6%, 6.25% interest rate. So that mortgage payment is now $4,722.
And the 6.25% interest rate takes me back to the late 90s, early 2000s.
Exactly.
Now, we've been living in this 4, 3, and in some cases 2% interest rate nirvana for several years now, and a lot of first-time buyers or even move-up buyers aren't used to a 6% rate, but a 5% rate, especially in jumbo loans, it's it's jumbo fix is definitely common.
Right.
So 6 may not be far off, depending on what we're looking at with staving off inflation and all the other market factors going on.
Absolutely. There's so much going on that you don't know what's going to happen in the future. I mean, I wish I had a crystal ball and I could have predicted.
Yep.
But, so this is kind of looking like, middle of the road scenario possibilities.
Yep.
But, I think having the numbers in front of you, stare back at you, is a good way to realize, okay, if I decide to wait, I need to be prepared to wait. I need to be prepared to pay more, get less, and from an investment standpoint, losing the opportunity to gain value and build your wealth.
Exactly. And when you and I were chatting about that a little earlier, especially on the 750 jumbo, 10% down, if you're buying now and your debt to income ratio, typical buyers about 28%, but let's say
housing to
for
ratio,
housing,
yeah.
yes.
Mm-hmm.
So let's just kind of simplify it to 25% because we're pretty close. So for every 25 cents of a dollar you get, you've got that as a good safe spot for your home. Well, on a $3,600 a month mortgage, your income should be circa, $14,000 a month.
Exactly. Mm-hmm.
Waiting 3 years for the $4,700 a month payment, your mortgage, your salary, combined incomes, especially if it's husband, wife, significant other, so on and so forth, you're looking close to $20,000 a month. 18 to 20, to keep those ratios in line. Right. So I don't know about you, Morgan, but Michelle, if we're looking at these types of increases, you're hoping somebody's getting a big promotion.
Yes, absolutely. So if you're thinking about it and you realize, wait a minute, if I buy today, I can make this much money. But if I wait 3 years, I need to make this, X amount of dollars. Then you have to ask yourself, am I going to make that kind of money in 3 years?
Mm-hmm.
And if the answer is no, then you, again, are you going to be able to qualify, or you're just going to have to significantly reduce what you're looking for.
Exactly.
Give up some of your pros and cons when you're looking for a home, for your family.
Yeah, because if you're going to right set the house that is $750 today, it's $860 3 years from now,
mm-hmm.
back to a $750 home. Most likely it's a smaller home, or it's a home further away from where you originally planned, or possibly in another market.
Absolutely, yes.
So I mean, those are the factors you have to think of. And two, when we look at this cost of waiting, you've got the big slide here as well that shows, how big an impact it is over time on property appreciation and amortization loss.
Right. So going back to just waiting 6 months on this scenario, there's a payment difference between now and 6 months from now of about $287, which is a loss of $3,400 that you could be using to do something else with. Maybe contribute to college funds or retirement or whatever, go on a vacation, whatever you want. That's because now it's going to go to a mortgage, okay? In that scenario, 6 months, there's a loss of appreciation of $34,363. And amortization loss, that's the amount that you would have paid down and built equity on your mortgage of, $4,900 for a total of $39,280 in loss just by waiting. No. So, if from an investment standpoint, if you can qualify now, it would be a great idea to get in.
And we use this term a lot. I know I was at a broker meeting yesterday. We've worked with buyers. I mean, we have 2 or 3 buyers we recently closed on houses. Waiting 6 months is not unusual just to find a house because we are in a busy market.
In today's market.
So, and that being said, some people are like, hey, I'm going to wait for the unicorn, as we like to say. And waiting for the unicorn, You better hope the unicorn comes with maybe some gold ducats, maybe some Bitcoin with them.
Exactly. A sack of gold.
Sack of gold. Because of waiting here, and you had a great statement, Michelle, about maybe the house isn't perfect, and really the opportunity to even build a custom home perfect is difficult. You know, it's all about compromises, but the key is it's checking off the priorities. But there's one thing about this house, or any house for the most part, any house, especially one that's in a appreciation market.
Right. It may not, especially in this market where they're limited inventory. So if you find a home that checks off 8 out of the 10 boxes, it's not the perfect home, but it's a great way to save for your future home. It's a great, because with these amortization, appreciation and amortization for that matter, nowhere are you going to be able to save that kind of money for your additional requirements for a future home.
Exactly.
So this home is basically a savings tool.
It's self-disciplined savings.
It's built in, and so that's a reason why I think it's a great time to purchase a home.
Even while we're at top of market, things of that nature, and we're talking about buying your primary home, the home you're going to live in, whether you're going to get married, find someone, raise a family, grow, to help be near your job, things of that nature, the shelter over yourself. We would definitely take a look at things in a much different light if we're looking at about investors, and that's definitely a whole nother.
That's a whole nother beast.
A whole nother topic.
It's another topic. It's a good topic, though.
So again, it gets back to the simple fact of, if you're looking at buying a house today, what is your affordability? And I think the first thing to do, we definitely want to reach out to Michelle. If you have questions about it, comment below. We'll send those over. Michelle, can people catch up with you on social media?
Absolutely. You can find me on Facebook, Michelle Morgan at Aloha Lender, or on my Instagram page at Aloha Lender. And my contact information is on there. Just DM me and I'd be glad to work with you, do a custom scenario for you, so you'll know with your numbers what the cost of waiting is.
Absolutely. And as I'm speaking with Michelle as well and chatting with clients and people that I know, we're wanting to set up meetings for people that are considering buying now and over the near term, because it's not just what's going on now, let's go look at houses. It's about, okay, I'm thinking about buying when this happens, and go, okay, well, let's sit down and talk about that, because we're going to get with Michelle. We're going to pull these numbers together so you can see firsthand of what it looks like if we go shopping now, or we go shopping possibly 3 years from now.
Exactly. And in the end, it is your choice, but make an educated choice. Be prepared and have the right expectations. And that's where people get, I'm just going to wait 6 months, or I'm going to wait a year. And they still have today's expectations for tomorrow's purchase, and they may be incongruent. They don't match up.
Absolutely. Absolutely. So Michelle, thanks for being in today. I appreciate it. This was some great stuff. If you have any questions, again, reach out to Michelle. You can find her on Aloha Lender on social media. Also, to message us, I can get the email over to Michelle. We can set up appointment and time, in-person, Zoom, conference call. That'd be great. Yeah. And also, too, if you like this video and, the Cramer Group, we got Coffee with Cramer, where we're releasing videos about real estate, lifestyle, and community. Hit the subscribe button, and appreciate you tuning in today. We wish you all a great day. Have a great one. Take care.
Take care. Thank you.
Bye-bye.
Bye.